Hello and thank you for joining us here on the floor of the New York Stock Exchange for this week's MacDesk Floor Report. I'm Rebecca Darst from the MacDesk and we are down 163 points in the Dow. This is a second straight day of declines for major indices, although we are trading around the lows of the session right now, and it is coming from yet another slate of disappointing macro data from multiple continents. We came into this market this morning with some lingering dismay over the Fed's statement yesterday and the downward revision of their growth forecast for the U.S. economy amid a confirmation of a weaker hiring outlook. Again, all of that QE3 speculation last week seems to have really run its course. The first data point during the overnight session was manufacturing data from China, which disappointed to the downside, in fact indicating an 8th straight month of slowing factory activity. European stocks moved lower overnight despite some relief in Spanish bond yields and decent UK retail sales. The market instead focusing on disappointing manufacturing data from Germany. The PMI reading for Europe's biggest economy came in at 44.7 against an expected reading of 45.2. This set the stage for a particularly disheartening set of data points here in the U.S. June PMI manufacturing for the U.S. came in at its weakest level in nearly a year. We had a slightly disappointing weekly jobless claims number. Last week's new claims came in at 387,000, which was not hugely out of step with the market's expectations, but was enough to push the 4-week moving average for these claims to their highest of the year so far. That's confirming a lot of this perceived loss of momentum and confidence on the jobs front. Markets were looking a little rangy in the early going, but took a big leg lower after 10 a.m. when we had first a weaker than expected May existing home sales number, followed by a big miss in the Philly Fed manufacturing number for June. The street was looking for the index to break even on the month. Instead, we came in at negative 16.6 for June, marking the lowest level since the market volatility of last August. We saw an immediate drop below $80 in crude oil, and then one of the major brokerages came out with a call to short the S&P with a target of 1285. Late in the morning, rumors began to circulate that Moody's is set to announce downgrades of a number of large cap banks after the bell. We'll wait to see whether there's any truth to that rumor, but the report has been widely circulated today. We also had the results of some independent Spanish bank audits, which projected the capital shortfall for that country's banks in the 50 to 60 billion euro range. Prior forecasts had been as high as 100 billion euros, and the reports did seem to clear the nation's top 3 banks. The market hasn't responded a great deal to that number. Again, we've got a broader macroeconomic story going on today, with everything pointing to expectations of a slowdown. All Dow sectors are down with the exception of telecom. The VIX is higher by 10%, bringing the index back above a reading of 19. And VIX futures are higher across the curve, with the July reading coming in at 22 and August just below 25. For additional market insights, be sure to check your inbox for the midday. For now, that's it for me, Rebecca Darst, for the MacDesk Floor Report.